But shifting focus, in fact, let's take that point further. Let's discuss the outlook on various commodities, especially when it comes to gold, crude oil, and industrial metals. And to discuss exactly that, we now have Mr. Prathamesh Mallya, Deputy Vice President Research, Commodities and Currencies at Angel One, now joining us. Mr. Mallya, thank you so much for taking your time out and joining us here on ET Now. And first up, let's take that point further. So let's talk about gold. It is considered as a safe haven asset, but despite that, given the recent drought that we have seen across the board for equities globally, safe haven demand is not keeping up pace and gold too has fallen. What's your outlook when it comes to gold, and do you believe the best of the run-up that we saw in the last calendar year and this calendar year is perhaps behind us when it comes to yellow metal?
I think your recent commentary from one of your guests clearly stated that any asset class cannot rise to infinity, and it has to stop at some point. So, despite the factors with regards to uncertainty, tariffs, and with the global rout that is happening, I think the correction was bound to happen, and this correction is an opportunity for those investors who missed the rally before. But yes, as reiterate it again that gold, which it has seen almost double-digit rally in past few years, and in the first quarter itself, which is first January to April, it has shown good returns. But I see a lot risk factor coming in here, and there's a sort of correction that will happen, and that correction can extend in the Indian markets to around 84,000 to 83,000. So this is one stable zone wherein investors can look to accumulate gold.
Gold prices to correct in the domestic market to about 83 to 84,000 rupees for 10 gram. But what's your outlook when it comes to silver? We understand silver has underperformed because industrial demand could decline in the global market on account of recession, on account of slower demand globally. But what would your view be as far as silver is concerned versus gold?
I think when you compare gold and the rally of silver was fast in comparison to gold. Silver has crossed 1 lakh mark very recently, and from that levels, there's a good correction that has happened. But then in continuity, apart from the safe haven appeal, I think silver is an industrial metal as well as an investment metal. So on the investment part, there would be ETFs running in to catch up the rally in silver, but the industrial part is something that would be lacking. So I think again from 1 lakh to around 89,000, there's a good correction that has happened of around 10% to 12%. So this fall in silver gives an opportunity for those investors who have missed the rally before. I think for silver, base would somewhere be around 82,000, 83,000. It is currently trading at around 90,000 mark.
See silver prices headed, since you're saying that it is a good buying opportunity for silver because it is corrected from 1 lakh to 89,000. How much more upside do you see for the next 3 to 4 odd months?
I think the stable zone would be somewhere around 83, 84,000. That is where we would advise investors to accumulate this metal, and it would again see 1 lakh crossing possibly in the next 4 to 5 months perspective.
Okay, so silver prices could cross 1 lakh again in the next 4 to 5 months. That's the word coming in as far as precious metal market is concerned. But let's shift focus to crude oil because Brent crude has also fallen off from the recent highs. One, of course, is demand concerns, and second, Saudi Arabia has gone ahead and cut prices. How do you see these developments shaping up for oil market globally, and where do you see oil prices headed? We have several brokerage houses which have gone ahead and cut their estimates for Brent crude. Would you concur with this view that Brent crude is perhaps headed for $60 and $55 per barrel mark going forward?
I think if you look at correlation between crude and equities, there's a significantly high correlation. If equities fall, all the risky assets fall, and crude is one part of it. Despite there being demand slowdown, crude was stable. I'm talking about WTI, which is stable in the range of 65 to 75. And as far as Brent goes, it is 70 to 85. So it was stable in the range for past few months. But yes, I see correction in this counter happening. And if you're specifically talking about Brent, there's a lot more to happen. Taking into consideration the US recession on the cards because of tariffs and the global dynamics that will come into picture as far as demand consideration is happening. So in the recent weeks, crude in the Indian markets has corrected from 6,000 mark to almost around 5,200 mark, which is a significant and healthy correction. I think the bottom and the base price for crude would somewhere be around 4,800 per barrel mark as far as Indian markets are concerned. And on the Brent side, yes, I would not rule out furthermore correction of 7 to 8% from current levels.
Prices could correct further by about 7 to 8%. And one last question on base metals. Although from the lowest point of the day, we have seen recovery come in today. But what's your outlook for the rest of the year when it comes to other base metals? Zinc, lead, copper, aluminium. Your view on any of these metals?
I think all these are industrial metals, and if there's a lot of uncertainty, the demand certainly will be a lagger here, and that is what would lead down to correction in all the metals. Again, base metal is one of the risky assets. Equities go down, base metals definitely follow the path. But I would pick one metal here, copper. It gives me significant confidence. The prices of copper, I think it has got a correction from 900 mark in the Indian markets to around 800, 810, 15. I think there is further room for correction from current levels. I think 800 would be the base point as far as MCX exchange is concerned. And yes, the confidence would somewhere in the copper would be built around 800 rupees mark.
Okay, so that's the word coming in on where industrial metals are headed, and perhaps more correction could be on the anvil. Mr. Mallya, thanks so much for taking your time out and joining us here on ET Now. But let's take.
If you like this video, then like, share and subscribe to ET Now.